Ms. Sanders, if you would kick things off, we'd appreciate it.
Good evening, everyone. Welcome once again to our monthly webinar. We thank you so much for showing up and participating with us. We know you could be spending your evening doing other things, but the seminar tonight is going to be one to remember. The topic is the stock market is coming off of all-time highs. Should you take some profits? So this is going to be a really great conversation. We are going to ask Ms. Mildred Gaddis if she would introduce our speaker tonight. Welcome, Ms. Gaddis.
Good evening and welcome to everybody. Happy are those who dream dreams and are willing to pay the price to make them come true. You know, for some time, for quite a bit of time, when you think about 26 years, ELE Wealth Management came into the city and created um, an energy that we had not seen before, especially when it comes to wealth and with assets. And I can't explain it. Maybe some of you can explain it. Maybe Mr. Liddell can explain it. I don't know if it's the consistent talk that we're doing to our friends. I'm not sure if it's the talk show. I'm just not clear. And I don't know how you measure that. That energy has been revived, and more people are talking about the content of the discussions that we have on the radio and the level of professionalism and treatment they get when they enter ELE Wealth Management offices. I can't explain it. Maybe you all can explain it, but I'm certainly excited that it is happening because it is creating a new generation. And Mr. Liddell talks about this all the time, generational wealth. But there is something, what I don't know what it is. I don't know if it's in the water, Mr. Liddell, or what. But we know recently it was in the statements that were mailed out as a result of what's been happening. We know that. We certainly know that for sure. Um, but I'm excited about it. When Mr. Liddell came to Detroit 26 years ago, a little over 26 years ago, um, he talked about this vision, and I was so uninformed I could not see it, but I can certainly feel it. I tell you that. Um, but I think that one of the greatest stories is the number of people who are checking in, people who had been telling themselves, you know, I'll take care of that tomorrow. I'll get in it next year. They're almost beating the doors down. So I'm very excited about that. It makes our community financially healthier and wealthier, and that's good for us all. And without further delay, I want to bring our leader, Mr. Ellis Liddell, founder and CEO of ELE Wealth Management.
Well, thank you, Miss Gaddis. Every Sunday morning, Miss Gaddis makes me look like a superstar. She has a way of introducing me to the audience that makes me feel like I'm walking on a cloud, and they in turn see the cloud. I mean, she paints this picture and they see it. So I thank Miss Gaddis every Sunday morning for making me look wonderful. Um, and we have fun. And I think that's what makes a great show is for the host to have fun. Uh, we she asks me great questions, I ask her great questions. Sometimes she's uncomfortable answering my questions, but always it's a slow pitch, Miss Gaddis. I know you know the answer. You just never
Well,
been
you know,
asked a question.
I want to
What?
say
Go on.
this.
Uh huh.
I want to interrupt you, and I think this is the most important thing. Ellis Liddell has been able to make finance relatable. You know, people check in because wouldn't you all agree with that? Because they begin to understand. And I think for so many years, this discipline has not been easily accessible for us. And people connect. And the key is that he really makes the discussion about money and wealth relatable. And I will not interrupt you anymore, Mr. Liddell.
Oh no, you're okay. And that gold chain is doing what a gold chain's supposed to do. It's looking like wealth. Yeah.
Really.
All right. So tonight we're going to talk about a few things, but more importantly, we're going to talk about the path to wealth. We're going to talk about how wealth is created and is it real wealth? Because the challenge for most people is getting wealth and then hanging on to it. Um, you ever had a lot of money and somehow it dissipated and you go, how did that happen? And that's the challenge that we all are faced with, is how do we make sure that we keep what we get? Ms. Geddes talked about seeing it in the statement. We had a really, really, really good quarter, starting with April, May, and June. And a lot of advisors would have left a lot of money at play and allowed the stock market to perhaps take away from some of that wealth. We decided to capture that wealth. It's not an easy decision to decide to pull clients out of one stock that has done well. Intel, for example, we bought Intel at like $25. It went to $100 a share. We saw it appreciate $75, and we made the decision that Intel had kind of maxed out. And with that decision, we exited Intel. Even though it had been really, really good to us, it had made us $75. And we got out around 104, and today Intel's at 132. Some would say you could have stayed in and it would have still got to 132. Others would argue that people can't emotionally handle the ups and downs of the market, and that you're not only managing their money, you're also managing their emotional intelligence. And in our case, as a group, we had made over $15 million. And when that happens, you tend to want to lock some of that wealth in. Well, once you lock the wealth in, and I want to just talk about the importance of having things in place. And tonight, before I get too deep in the weeds about taking money off the table, leaving money on the table, how do you manage stocks and portfolios, I'm going to have another estate planning attorney talk with us a little bit about the importance of having your estate in order, having your plans in order. With that, I'd like to introduce to some and others Elizabeth Rogers, Attorney Rogers. Good evening.
Hi, good evening. Thank you so much for having me. I'm happy to see all of you. And we've talked a little bit already, sort of about the framework. We've talked about building wealth. We've talked about having things in place. And we've touched a little bit on how much of an effort it takes to build some of that wealth and how commendable it is when we do it. But it's not commendable if you take the time and the effort and exercise the discipline to build wealth, but then you don't plan for what happens upon your demise. Death is the one thing that we can all be certain will find us. No matter how long it takes, we know that we are going to go that way, as the preachers like to say. In our community, sometimes we make the mistake of believing that if we plan for death, we somehow hasten it. But I have been on the side where grieving families have been trying to, first of all, identify where all of their assets are, and then try to figure out what to do with them while they are grieving a mother or father or another loved one who was very precious to them. I've also seen scenarios where maybe there was a blended family and there was a child who was estranged from a parent, and the children who were loyal to the parents, I'll put it that way, they're not even provided for because maybe the intestate laws didn't consider them the way a parent would. So I just want to encourage you to please think long and hard and plan for your transition because it is inevitable. I also want you to think about what you want to happen. Who is it that you want to manage your assets upon your demise? It may not necessarily be your favorite child, especially if your favorite child, even if he or she is an adult, even if he or she is really responsible, that child, if they have siblings, remember that that child may have to carry out your wishes, and your wishes may be unfavorable to the other children. Again, I've seen adults, very capable adults, come into my office and literally cry tears because their siblings now don't invite them to family dinners anymore because mom said do A, B, and C, and A, B, and C are not what the siblings would have wanted a parent to do. So when you are making decisions and when you are thinking about how you want assets to be distributed, when you're thinking about who you want to take that role, it may not necessarily be your favorite child, even though you know that person is going to do what you say. It may be a disinterested third party. It may be a lawyer. It may be a trusted advisor who's significantly older than your adult children, and your adult children won't challenge that person the same way that they would a sibling. So be mindful about that. Another thing that people don't really think about is if you pass away unexpectedly, there is a gap between the time that your assets can be distributed and the amount of bills that are due in the gap. If your mortgage, for example, is $3,000 and your house is not yet ready to be sold, your family members may not have an extra $3,000 a month to pay your mortgage and an additional maybe $1,000 a month to pay your utility bills, even while your house is on the market. And if you already were a month behind thinking that you were going to catch up and you were unexpectedly hit by a car and that was the end, your family members may not be in a position where they can cover those bills long enough to get that house sold. So again, you may be unwittingly putting your family members in a very difficult position. All of that can be avoided by a simple plan. And if you speak with a lawyer who is knowledgeable and experienced in this area, there are some things that you are going to cover up front, not just items like what do you want to have happen with your assets, but they also are going to talk to you about the relationship between the folks that you may want to manage your estate after you pass away. Is there some harmony between those parties? Even though we don't always want it to be true, but we know when our family members are going to fight. And sometimes we have been surprised when we see how people change when there's money on the table. If you know that you have family members who are going to fight, if you know that you have minor children, especially, if you know that there is someone in your life who is really important to you, but you don't have a marriage relationship with them, which is a legal contract. You don't have a marital relationship with them. You don't have, that person is not your child. Then that means that intestate laws are not going to provide to them. It will be up to you. Worse yet, if you have spent a lot of time and effort and energy amassing wealth and you die intestate and you are unmarried, your parents are deceased, and maybe you don't have children, your assets could escheat to the state. And it could be enough money that it changes someone's life. So again, don't let that type of thing happen. A will is a very easy document to prepare. We know exactly what questions to ask you, and we can help you determine whether you need a will in addition to a trust. There are tax considerations that have to be contemplated when you are putting together your estate plan. Your relatives won't know what to do with all of that information. They won't know how to find your assets. They won't know which 401k documents to look for. And if you live alone, they won't know where you have stored that information. A bank will not speak to your relative unless they have a legal document that gives them the authority to do that. And you get that through a probate opening and you get letters of authority, but your loved ones may not know how to do that. So again, please do not put them in the situation where they have to, especially because it's something that is easily remedied. They say that an ounce of prevention is worth a pound of cure. And I know that people get upset with the lawyers and people say, oh, the lawyers are the ones who made out. But if your family members are going to fight over your assets, it is going to be an expensive battle. And I have seen families tear one another apart. And so not only are they suffering from the death of a loved one, but now they re-injure one another in the most intimate ways because families know where the bodies are buried and they know where the wounds are. And it comes out in horrible ways. So you really can prevent that. I want to mention a couple more things to you. One thing is that even though we don't necessarily expect it, the unthinkable can happen. I received a phone call a couple of weeks ago from a woman. There was a business that was owned by 3 siblings. One sibling already was very ill. Another sibling, the 2 remaining siblings, were in a car accident together, and one of those siblings was killed unexpectedly. So now you have a business that's closely held, is operated by a family, and within 2 weeks, you lose two of the principal family members. That leaves the one surviving family member to not only grieve the family members that have been lost, but also to try to figure out, how do I operate this business without my siblings? And again, if there's no legal authority, that person is going to have a very difficult time. Even if they are the person who is going to be appointed as the personal representative, now you have two estates and you have a business. And there are some contracts that are the lifeblood of the business. There are some contracts that that one survivor may not even have legal authority to sign on behalf of the company. So think about the complication of that. And there again, it can be avoided if we put together our documents during our lifetime, so that your exactly what you want to have happen happens. The probate code or the estate code and testacy code will not provide for what you want to have happen. So you are uniquely positioned right now. You have the information, you have the access, and you have the wealth. All you need is the plan. So I just want to encourage you to make your plan today and don't wait for it. Death is coming whether we want it to come or not. So we may as well prepare for it.
All right, Attorney Rogers, that was remarkable.
It was.
That covered a lot of ground, and I'm going to take a few more minutes of your time to cover a few more things. So, can you give us till 7:30? Can you give us 10 more minutes?
Absolutely.
Okay. All right. The pearls are working. You don't have to clutch them, but the pearls are working. All right. Having said that, what's the first step for us getting your plan organized? What's the first thing you tell people to do before they come see you?
We tell them to do a couple of things. One thing we tell them to do is we send a questionnaire. The questionnaire is very comprehensive. The questionnaire asks you to identify all of your assets in whatever form they may be. So it may be real property, it may be personal property, which is property that can be moved around. That includes jewelry, that includes furniture, that includes automobiles, artwork. And it also asks about brokerage accounts, 401ks, all of your assets. It asks how those assets are titled. If you have a bank account, does it have a beneficiary? If you have a 401k, who is the beneficiary under that? If you own real property, how is it titled? In your name and the name of a spouse? Sometimes when people start going to look at these documents, you find out that maybe you took care of grandmother during grandmother's lifetime and she said, baby, the house is yours when I die, and you just kept living in the house. It was paid off, but maybe it's still titled in grandma and granddaddy's name and they've been gone for 15 years. So now we have to get the title to that house in the right name. And so we may have to probate that estate as well. So we send a comprehensive questionnaire. We ask you to list all of your assets, how they are titled. We also ask you to do some of the heavy contemplation that I mentioned earlier, which is how do you want your assets to be distributed upon your death, and who do you want to take on the responsibility of that? Some of what we will ask you in your questionnaire, and we will ask you when we meet with you, is what do you know about the persons that you want to handle your affairs upon your demise? Depending on the amount of money that is in your asset, even if your will or your trust provides that you do not wish for your personal representative or your PR to be bonded, depending on how much is in your estate and depending on whether people fight, that person may still need the ability to be bonded. If you choose someone who has a prior criminal history, I don't care if it was 20 or 30 years ago, you are opening them up for challenge. Someone may say that person is not fit to serve as the PR. So you will have to think about who you want to manage those affairs. And you also will have to think about where they are physically located, because some court appearances may be necessary. And even if we are over Zoom, depending on what court we're in, some counties are having in-person meetings and people may be required to be here to marshal those assets in person. And so we will have you complete a questionnaire where you're contemplating all of this at a very deep level, and then we will have more conversations about it. So the short answer to your question, Mr. Liddell, is we'll have you contemplate what you want to have happen with your plan. Get your arms around your assets and who you want to be your personal representative at your death.
All right. Second step. After you go home and you put all that stuff together, and let's just say, I'm going to deviate a little bit because we always have the nice conversation with the brand new attorney.
Yeah.
Let's have a difficult one. There was a will done 5 years ago. The person got sick, and all of a sudden there's this new will that's been done, a new trust that's been set up. When that's the case, talk to us about what it takes for that person to be in their right mind at the time of the new trust. Because the new trust tends to leave some folks out.
That's right.
We included.
So when we as lawyers are having conversations with clients or potential clients, we are ensuring that if we are not having those conversations face to face in person, we have them on a call like this, and we insist that their cameras are on so that we can assess for ourselves what we believe their cognitive ability to be. We are not physicians, we don't pretend to be. But if I am having a conversation with you, there are certain questions that I am going to ask you. And if it appears to me that you don't understand the questions that I'm asking, or that you are intermittently lucid, which means you are in and out. Some questions you understand, sometimes you don't understand. I can tell that it seems like you're not fully present, or that you don't have the cognitive ability to make the decisions that you say you want to make. That raises a red flag for me. And I may not be able to take you on as a client because I believe that you don't have the cognitive ability to contract. And so I'm not going to be in a position where I can help you make decisions specifically. If a family member says that you need a guardian or a conservator, I'm going to be looking for supporting documents from a physician that carries that out and that supports that assertion, because that is what the court is going to be looking for. So I'm going to be thinking about the kinds of questions that will be asked of me by the court, and also the types of things that a guardian ad litem, which is going to be the person that the judge appoints to be the judge's eyes and ears in the field. As soon as a petition is made, the judge is going to appoint a guardian ad litem to assess that person's cognitive ability. So I'm going to be thinking about what are the signs, what are the cues for me to determine whether this person actually it has the cognitive ability to make the decisions that he or she is purporting to make. And I'll be able to tell them if I can help them or not. If I don't think they have the cognitive ability, is nothing I can do, because I know that they can't make those decisions.
Hey, do you ever see it happen where that somebody tries to get a new trust done that leaves out the brothers and sisters? And I mean, does that ever happen?
It does happen. It happens, I don't want to say all the time, but it does happen with some degree of regularity. There may be some changes in relationships. Sometimes when people have been ill for a long time, people stop coming to check on them. I've heard people say, I haven't seen my daughter or my son in 3 years. Or sometimes when you've been ill for a long time, people only come around because they want something from you. So maybe you have previously provided for them in a will or a trust, and since you've seen and observed their behavior, you don't want to provide for them anymore. So it does happen. It doesn't necessarily mean that if there is a change in a trust during someone's illness, that they didn't intend to make the change or that they didn't have the cognitive wherewithal to do it. We just have to assess it on a case-by-case basis. And to the extent the court has to make an assessment during that person's lifetime, the court is going to be looking for documentation from a physician to see what does the treating physician say about that person's mental ability. And the court, as I mentioned, is going to send out a guardian ad litem to make a personal observation and give a report to the court about what that guardian ad litem observed, him or herself.
Okay.
Let me mention one more thing, Mr. Liddell.
Yes,
Sometimes
please.
we have people, you mentioned difficult conversations. Sometimes people come to us, and if you are a member of a married couple, we have to determine whether we are going to take on both clients or one client. If a husband says, may I please speak to you privately, or makes a private appointment, sometimes people have children who live in other states, maybe A man impregnated a woman when she was 16. He moved up north. The woman and the child stayed down south, and he found out that he had this child, and maybe he's been supporting this kid for the kid's entire life, but the new wife up north doesn't know about it. But the man wants to provide for that child in his will. Or maybe the opposite is true, where there's a woman, I'm saying woman in the South. Don't get mad, y'all, that I say it's a woman. Maybe it's because men don't usually keep the kids. But if there's a woman in the South who says, this baby is your baby, and the man says, I know that kid is not my kid, he does not want to provide for that child in the will. That type of thing comes up as well. There is specific language that we put in documents where we can make it clear that he intended to provide for this group of children. These are the children that he is defining as his children, and he is not claiming any children outside of those children. We don't judge those situations. For us, it doesn't matter what has happened or why. We just need to know the truth, the entire truth, so that we can make the plan that the person who is coming to us wants to have made. Keep in mind that if your spouse does not know about those kinds of children or relationships, do not retain the same lawyer, because what you tell a lawyer is privileged. And that means that the privilege follows you to the grave. If a husband comes in to see me during his lifetime, we put together an estate plan, and the wife is not also a client. If I know that there's a child out there that this husband has provided for, if he has not given me his express permission to disclose the existence of that child to his surviving wife, I cannot do it. So if you know there are things that your spouse does not know about, do not hire the same lawyer as your spouse. Your plan can be separate, and it should be if there are things you don't want your spouse to know. Again, as lawyers, we don't have judgment around that. Decisions are made for the reasons that they're made. We just need to know so that we can plan accordingly.
All right, Attorney Rogers, you actually touched. Listen, we've managed to have three different attorneys on the program. You managed to touch on some points that nobody else covered, and you made good points. We got. Can you put your information in the chat before you leave? How to
Absolutely.
reach? All right, and attorney, we just want to thank you for tonight. Truly appreciate it. We will have you on again. We'll go into more detail. I see you like to answer questions extensively, so therefore we're going to allow you to do that next time. Have a
Thank you
great
so
evening.
much.
Thank
I will
you.
put it in the
Thank you for
chat.
joining us. Thank you for joining us. All right, let's see if young Mr. Liddell is able to communicate right now. Not yet. Yeah, I can't figure it out. Yeah, can't figure it out. All right, Miss Sanders, are you still with us?
Here.
All right, Miss Sanders, what was different about what we heard tonight from Attorney Rogers? How did you feel about her presentation?
I think you said it best.
Open a lot of
Yes,
doors.
Attorney Rogers talked to us just like the way you said it about so many things that none of the other attorneys have discussed with us. We've talked about, every type of estate plan, why you should put one in place, but she has us thinking totally different. And one of the pieces that she mentioned is one of the areas I really have to face with our clients, the personal representative or your trustee. I'm usually the one who has to work with that individual. And a lot of times they do have to carry out some difficult tasks. And you really have to consider who you are listing, as your individual who's going to handle things for you, because it really gets sticky sometimes with the siblings. I'm working with a family right now. It is a tough situation.
All right, um, and that's what happens. We all, if you live long enough, every single one of you is going to go through some experience, pleasant, unpleasant, but you're going to have an experience. And ideally, you want that to be a pleasant experience, especially for your family members you leave behind. Attorney Rogers said something that was critical. Nobody gets out of here alive. It's, in other words, your day is going to come and you're going to meet your maker. And when that day comes, you want to make sure that everything is done properly. We've seen things as simple as a a husband and wife get a divorce, and he forgets to take his past wife off of his 401k as a beneficiary at work. And when he dies, the new wife of 21 years goes to try and get the money and finds out that he left his former wife on the contract and on his life insurance. So not only does she get the 401k, she gets his life insurance. So now the current wife is expected to bury him with little assets and little
I got
help.
that call today, Miss Liddell. Literally, that situation. Former
And it
spouse
recurs.
passed,
It
the
recurs.
former wife is the beneficiary, and his children from his previous marriage are doing the funeral, and she's like, should I tell him about this policy? $250,000.
Oh,
So,
you got to call from the former wife.
yes.
Ah, she wants to know if she should tell him. Or do you, what was the should I tell him? Who said should I tell him about this
She
policy?
she said should she tell him? So his children from a previous relationship are making the funeral arrangements. She called me to see if he still had the policy and if she was still listed as a beneficiary. And
Got
she
it. Got
was.
it.
And
Got
she
it.
was.
She was.
Yeah.
We'll let
So,
the audience in the Zoom determine what would they do if it was them.
well,
Would they tell
let me
somebody
give
or
him
would they
this.
not?
Let me give
Uh
him this
huh.
tidbit too. The reason she kind of said that. So her thinking is that she doesn't know if he has other policies. So what
I'm
do
sorry.
you
I
guys
laugh out
think?
loud, Miss Gaddis. I did not mean to. She know. Hey, very few people have $250,000 policies all over town. How about
Right.
that? However, she'll show up at the funeral, $250,000 proud,
Oh
and
man.
she'll bury him and say well wishes when she lean over. Hey, when she leans over that casket, boy, she's gonna say, "Thank you, honey. I appreciate you. I thought you
Listen,
know love me."
that's the second one that's like that. The last lady got $1 million from the
Mm.
ex-husband.
Yep, yep. And that's gonna happen. Some people love you to life, as they say.
Yeah.
They love you forever. And just because they got a divorce from you didn't mean they didn't love you. They divorced for other reasons. However, I hope those children can afford to bury him the right way,
Yeah.
uh, and it won't be a strain on any of them. And hopefully, he had another policy out there. Maybe he had 10 policies all over town. So
Right.
everybody get you get a policy, you get a policy, you get a policy. Everybody gets a policy.
Would be nice.
Yes. All right. What other observations that you make from tonight's conversation?
From Attorney Rogers, the conversation for me was just rich. The way her thought process was, she had a conversation with us about some things that we have not discussed previously and that aren't even on our radar.
Mm-hmm.
Um, the I'm trying to think of what was the thing that she said. So even when she's talking about her questionnaire, from the questionnaires that I've seen from estate plans, they have not been as detailed as what she described to us.
Mm-hmm.
So I really feel like in her meeting and even in her discovery, you'll get a lot more accomplished or even a lot more just really thought process into your estate planning because you just don't know what you don't know.
Right. Yep. You don't. And it's the first time you've experienced it, but it's not an attorney's first time. They've seen a lot of things over the years. And as Ms. Sanders stated, she's seen ex-wives left on beneficiary agreements more than once now. And I've seen it more than her. So it happens, and we don't know whether it's on purpose. And I pause for the cause.
And you don't know if it's on purpose. And that business piece of losing two family members in the same business.
Oh, that was challenging because you're now in business with the deceased person's family.
That how it would go.
Yep, yep, yep. All right, so now I just want to make sure when you call ELE and ask for attorney referral, we will give you more than one attorney. We give you options because There is no one size fit all for the attorneys. We try and make sure that we give you choice, and we try and make sure that we let you know that we've already vetted the attorneys by the time we introduce them to you. Ms. Rogers may be perfect for one set of situations, someone else might be perfect for another. We've got simple things as simple as a will or a trust, ladybird deed, powers of attorney, healthcare authorities. Based on what you describe your needs are, kind of determines who we send out to you. We're still going to share two names with you and tell you that we think they're both equally qualified to serve your needs, and they are. And that's why we rotate the attorneys throughout the year to make sure every one of them gets an opportunity to kind of paint the picture of what they serve, the area that they specialize in. Attorney Rogers, what I didn't say, her area of specialty is real estate. So if you have a house you want to leave to multiple people, different things like that, her area is real estate. If you have a business you want to leave, that's her area. So every attorney has a specific area that they focus on. They try and make sure they understand probate, different things, but her area is real estate. So, all right, having said that, let's move on to the stock market and the other part of our conversation. So for the sake of the webinar, Ms. Sanders, can you restate our topic tonight?
Our topic tonight is the stock market is coming off of all-time highs. Should you take some profits?
All right. So, for example, Intel, we talked about that earlier. Intel maxed out for a 52-week high at $141.45. Its 52-week low, $18.97. So if you bought Intel at $18.97, which is under $20, and it went to $80, you've made a lot of profits. Then it goes on to $140. You made even more profits. Do you wait for it to get to $1,000 a share, or do you say, you know what, I'm happy with the amount of profits that I made. Let me set aside some of those profits to the side. Maybe I'll just sell half the shares, because you still have quadruple your money. Oftentimes people don't. Ms. Gaddis and I talked about this on Sunday. Pigs go to market, hogs get slaughtered. I repeat, pigs go to market, hogs get slaughtered. Sometimes people are greedy and you wait too long and you start giving back returns back to the market. No one knows when to enter the market. And yes, can people time it just right? For example, Micron Technology. Micron Technology is a storage data company for storage for AI. Micron, 52 weeks ago, 103. So $103 a share, 52 weeks ago. Closed today at 12.55. 12.55 was the all-time high for that stock. Today it hit an all-time high. It was up at one point almost $200 a share today. In one day. That's a lot of volatility in one day. It went way up. Now, by the time they closed, they were up $165 a share. It closed at $1,213. Now, mind you, this was a stock that was how much? $103. It moved rapidly in 1 year. Why? Because of AI. Everybody talks about AI and you forget about the fact that when you delete things from your cell phone, where do they go? They go to a storage place. They don't go to the cloud. They're not in heaven. They go to somewhere to be stored, and they are never deleted forever. So just know they're never deleted. They're out there somewhere. Where is that somewhere? Well, Apple made a statement last week that they were going to use the technology and buy the technology from Micron Technology. And they also had earnings yesterday. Those earnings pushed that stock to a brand new high. And they're getting so many orders that they anticipate the stock may go. And I keep saying may, because Ms. Gaddis will tell you past performance is no guarantee of future results. Right. That stock may go to $2,000 a share, some analysts say. So if you buy that stock at $1,200 a share, and it actually goes there in the next year, 2 years, 3 years, you would have done well. Now, is it an expensive stock to buy at $1,200? Yes. But let me tell you about its big brother. Its big brother is a stock called ScanDisk Corporation. ScanDisk Corporation, 52 weeks ago, was at $40 a share. Yes, $40 a share. ScanDisk closed today for an all-time high at $23.35. That's $2,335. That's right. 2,000. How much was it 52 weeks ago? 1 year ago? $40. So if you purchase that stock, you're pretty happy. And maybe back then you had 2 shares, 3 shares, 10 shares. 10 shares would have made you a very happy person. 100 shares would have made you more over the moon. 1,000 shares would have made you almost a millionaire. Almost. A quarter of a millionaire. So 1,000 shares at $40 a share wouldn't have been a whole lot of money to spend.
Oh.
So I'm just letting you know, AI is changing the landscape. Things are changing. You've heard that expression. But $40 times 1,000 shares, and this is all if I woulda, coulda, would have been $40,000 invested for that 1,000 shares. That 1,000 shares goes to today's high, $23.35. It's $2,335,000. $40,000
The
investment.
calculator.
Yes, $40,000 investment would have turned into $2,335,000. I'm not making this up. This really, really happened. This is for real. Now, we caught magic in a bottle with Intel. We're trying to catch magic in the next bottle. We keep looking for that next big breakout stock that's going to do well. We're trying to anticipate what's it going to be. Now, you notice I didn't say anything about we're gambling. We're not going to the casino. We're not betting it all on black. We are looking for stocks that will be a part of the AI story 20 years from now. And that's the reason why these stocks have done well. Because Micron Technology, ScanDisk. ScanDisk, by the way, is a little dish you put inside your camera to store pictures on. I know you remember back in the days when you had to take your film to Walgreens or some CVS and have it processed. Well, now you just take the little disc in. And actually, it's to the point where you can print them off yourself. You don't even have to go to the store anymore. So things have changed over time. And they're going to continue to change. But they have to have a way to store the data. So right now, data storage is a biggie. Data infrastructure is going to be a biggie. AI data center is a big debate. Should we have a data center in our community? Should we not have a data center community? Is it going to drive the price of water up? Is electricity bills going to go up because we have a data center? Is it going to cause cancer? Is it going to do all these things? Those are questions that scientists and other people are trying to get answered. But if you notice, they build data centers where? Close to cities where there's a water source. There are townships out there with their hands up. Put a data center here, put a data center here, and they're getting overlooked. Why? Because data centers need to be cooled off, and they need a strong water source, and they use a lot of electricity, so they need a strong electrical source. One that's not going to be interrupted. So, blackouts or whiteouts, whatever they're called, you're not going to get a data center in an area where there's blackouts. Why? Remember a few years ago we had a blackout in Michigan, and it just kind of went from Boston down to Michigan, and it was right in the middle of a very hot summer.
Yeah.
That blackout wouldn't work well for a data center. So they want to put it in an area where that's not the case. You don't want to put a data center in an area where you have tornadoes, Tornado Alley, and this big flat building that's holding all these things is subject to being blown away. So not everybody who holds their hand up and say put a data center here is going to get a data center. A data center costs $1,300,000, and that's for a small data center. A large data center is going to be upwards of $2.3 billion. Now, how many jobs does the average data center create? Only 25. So when you're talking about $1 billion investment that's going to create 25 sustainable jobs, it's not a big revenue producer for a city. What the city gets in exchange for allowing a company to build a data center there is they get an infusion of cash, usually somewhere in the $150 million level, and it goes from there. So data centers don't create a whole lot of jobs, but the jobs that they do create are very professional jobs with an average salary of around $250,000. So that's like your best factory jobs, your best management jobs. So they're going to create some great jobs, and they're going to last for years. A data center is going to be good for 40 to 50 years, and that's just what they can see so far. But it's going to be there until something better comes along. Many of you on this call have lived through many changes that have happened. None of you were around when electricity was created. You may just feel like you were, but you wasn't. So, they say the greatest creation ever was electricity. The second greatest creation ever, and most people pause and say, I'm going to give you a second to think of what you think the second greatest creation was.
Bread.
Internet.
Oh, absolutely.
Yes, the
Absolutely.
internet was the second greatest creation. And they're saying the third greatest creation of mankind will be AI.
Automobile. Oh, AI, really?
Yes.
Before the
Greater than the
automobile?
automobile, greater than listen, hey, greater than automobile, greater than sliced bread, greater than fire. Yes, they're saying that the three greatest investments: electricity, internet, and now
Yeah.
AI.
Hmm.
Those are the life-changing things that are going to happen. So we took some money off the table. We picked the stocks for most of you. Some people picked their own stock. World Cup was coming to town. I got a call from a couple of clients saying, hey, World Cup is coming to town. It's the biggest soccer thing ever. Can you buy me Nike? So we bought them Nike. And guess what Nike did?
What did Nike do?
It went up. It went up. So the
Wow.
clients are very happy, and I'm happy they picked it. Now, if you call us and you pick your own stock, what do we tell you? You watch it. You tell us when to sell. Now, that doesn't mean we won't call you and say, hey, you up a lot in Nike stock?
Is he frozen for you all?
Yes.
Okay. All right.
Yes.
All right. I'm going to give him a second because he's probably going to just log out and log back in. Hmm. But if you have any questions while he's getting together, because we do have about 15 to 20 more minutes. If you have any questions regarding anything he's talked about, or even anything regarding the estate planning, put them in the chat for us. And when he comes back on, I'll get your questions answered. All right. Yep, unmute yourself.
All right. I guess I said something I wasn't supposed to say. I was a conspiracy theorist. Oh, my goodness. Ms. Kitchens asked the question, is now a good time to take some earnings? Ms. Kitchens, we did take some earnings on your account. It doesn't mean it's not a good time to take some more earnings because we do think there's a lot. Okay, there's some risks that we have to be concerned about. Political risks. Are we in the midst of a political risk? Absolutely. Until this war is settled with Iran, yes, there's some concerns. A second risk, economic risk. Is our country stable? Is spending at an all-time high? Yes. Does it cost more to go to the grocery store? Yes. Does it cost more to fill up your tank of gas? Yes. All those are risks that affect the market. The Fed is considering raising rates. Now, it doesn't make sense to some of us why they would raise rates right now when people are having a hard time. However, that's not our department, not our job. We would think they would be lowering rates right now so that people could spend more money. Well, that's the challenge. The reason why the Fed wants to raise rate is they think people are spending too much money. Credit card debt is the highest it's ever been, and it continues to rise. So the Fed said if we make rates higher, make it less likely that the barrier to entry is going to happen, that's going to slow things down. So basically, the Fed is saying we have a hot economy right now, and they would love to slow down this economy. Well, how do you slow down this economy? You slow it down by raising rates. So now you understand why the Fed is debating on raising rates to slow this economy down, to slow down spending. Now, we live in an economy that the savings is supposed to be a big part of it. Yeah, Ms. Pegler asked the question. If you
Well,
take some earnings off the table, is that a taxable event? Yes, it's a taxable event. But let me explain taxes to you guys. Here's the thing. And I'm gonna use Miss Sanders for my example. So Miss Sanders, I got $1,000 in my hand. And I
yes.
tell you, I'm gonna hand you this $1,000. And what I want back is 30%, the
Okay.
highest tax rate, 30%. So I'm
All
gonna
right.
give you 1,000. You're gonna give me 300. How long are we gonna trade money? I give
All
you a
day,
thousand,
all
put
year.
I give you another 1,000, put 300 in. A lot of
Yeah.
people come to my office. They say, Mr. Dale, I have a tax issue. And I look at how much they're making. I said, no, no, you don't have a tax issue. You have an earnings issue. You're not earning enough money. And they mentally are telling themselves, I don't want to make more money because I have to pay more taxes. And nothing could be farther from the truth. Believe it or not, the more money you make, the less taxes you pay. Why? Because you are eligible for different kinds of write-off. For example, you make a lot of money, you have a business, you can do Section 179. What is that? If you buy a car that's over 6,000 pounds, you get to take the deduction in the year that you purchased the car. So you write that off against your taxes, against your business. So the other thing, but Ms. Pegler asked a great question because she's our tax consultant in the office. So
Yep.
Ms. Pegler wanted me to let you know that if we take some profits, just know you got to pay somebody. Make it rain. Make it rain. All right. All right. Other questions in there, Ms. Sanders?
The one of the other questions was, what are the different divisions of AI? And I mean, I
Yeah,
can take a little.
there's things that we haven't even discovered yet with AI. It's a lot more coming with AI. All I can say is stay connected and learn the different rollouts for AI. Most of us think AI just showed up 3 years ago. AI has been around for 10 years. That's the reason why it's getting more and more developed. ChatGPT, OpenAI, and speaking of which, I'm going to talk a little bit in a second after we answer Pastor Burr's question. I'm going to talk a little bit about SpaceX and what happened with SpaceX and what's happening with SpaceX. All right, Ms. Sanders, can you read Pastor Burr's question?
Okay, Pastor Burr asked, I've just started receiving Social Security. Should I put some of that in the stock market or an IRA?
Can't do the IRA unless you have active income. You can do a Roth, you can do a traditional up to a certain limit. Uh, in your
Good.
particular case, Pastor, you're still active. So, yes, you can max out an IRA account. Uh, the church probably doesn't have a 401k plan, but you can definitely max out your individual IRA plan for yourself and your wife. So, it gives you quite a bit of money you can put away on you all's behalf. Anything else in the chat, Miss Sanders?
No.
Okay, let's talk about SpaceX for a second. SpaceX was the most marketed IPO ever in the history of the world. It was also the biggest IPO in the history of the world, which is no surprise because it's so easy to market when you own X. I repeat, it's so easy to market when you own the
Right,
market.
right,
The-
right.
And so a lot of people came on and beat the drum for Elon Musk and talked about how great this company was going to be, and it convinced a lot of people that their stock was going to quadruple. He was going to be a quadrillionaire, and he was going to take you with him and make you a billionaire.
Yeah.
Well, it's still early, and it still might happen if you deal in the world of what's possible. Yes, it's possible. But let's deal in the world of reality for just a second. SpaceX came out at $150 a share. It's closed today at $153 a share. It had a pull down, and it's been a pullback as we call it. So it's been pulling back since it reached that peak of it actually peaked out at 160 was the high for SpaceX. And then ever since that it's been going backwards. Well, why? Because there were a lot of people who had $1 million worth of SpaceX stocks who worked for SpaceX, who were granted this stock, but they had a 15-day cooling off period. They had to wait before they could sell that stock. Now, if you've got $2 million worth of SpaceX stocks, but you're sitting at the house with the lights off because you can't pay your utility bill, what do? You sell some stock after the 15-day waiting period. And if you come to a broker and say, hey, Mr. Liddell, I got $2 million worth of SpaceX stocks, how much should I sell? I'm going to ask the first question is, do you want to be a millionaire? Who wants to be a millionaire? Who wants to be a millionaire? And if you say you want to be a millionaire, I'm going to encourage you to sell half of your holdings. And that's what drives the stock down right now, is a lot of people are selling. So there's a lot of activity in the market right now. Today, it was 230 million shares traded. That's a lot of shares to be traded in a day. So there's a lot of activity, but it's a lot of people trying to cash out. Keep in mind, the people who purchased it in the pre-market bought it for $130 a share, $135. But the people who bought it in the post-market as an IPO, initial public offering, paid $150 a share. So if you bought it for $150, that means that if you bought it exactly at $150, you're up $3. But if you bought it for $150 and it ran up to $160, and you bought some more at $160, then you're down $7. SpaceX has a wonderful marketing machine. Do I think it's going to continue to rally and come back? There's a great possibility. I know this about Elon Musk. I don't bet against him because I watched Tesla's rise. So I'm not encouraging people to buy it, but I'm just cautioning those who are interested in buying it, who saw the pullback and hesitated. Just know that his goal is to be the #1 AI provider in the world. Some people say, whoop, somebody already has that title. True. Somebody already has the #2 title. True. However, there's a way to buy anything. He just offered $600 billion for a coding company that coded for the other two big players in the market. So he figured he would go in and buy the coding company and control the future of that particular market. It may work, it may not, but no company has ever been purchased for $600 billion before. You can make that kind of offer when you're worth $2 trillion, when your company is worth $2 trillion. But he also went out to the bond market and said, hey, AI is going to be very expensive. I need to borrow some more money. Somebody just gave you $2 trillion of net worth, net capital. And you say, I need to borrow another $2 trillion to make this work. So the bond market is also the reason why SpaceX stock is down, because the more you borrow from others, the tougher it's going to be for your company to grow. In other words, think about this. You go to the bank to get some money to buy a house. The bank asks you, who else do you owe? You say, well, I just left Wells Fargo. I borrowed some money from them to pay off my credit cards. They say, well, how much did you borrow? I borrowed $150,000 from Wells Fargo to pay off my credit cards. Your credit cards for $150,000? Yeah, I've been living on my credit cards. Well, how much do you earn at your job? Well, I make about $200,000 a year. Well, you have a good income. What other debts you have? Tell us about your other debts. And you proceed to tell them that you borrowed money from your mom, you borrowed money from your dad. I don't think you're going to be a good risk to the bank. That's what's happening right now with SpaceX. SpaceX is borrowing money even after they were given $2 trillion. It doesn't look like they're on the right pace, but when you offer $600 billion to buy your first asset, even though you're worth $2 trillion, that's a large percentage of your current available equity. And that's what made Wall Street go, pause for a second. Let's take a closer look at SpaceX and can they do what they say they're gonna do? And bear in mind, SpaceX, the quarter before they went public, IPO, they lost several $billion in one quarter. So the company has not made a profit. And when we look at companies, we look for profit. That's one of the key factors of looking at a company. We look at profit and we look at potential. If the profits are there, the potential is even greater. But if there are no profits, the potential is questioned. And that's what's happening with SpaceX right now. So is it a great time to buy? I don't know. Is it a great time to sell? I don't know. But just know that SpaceX has a master marketing machine and they will make some noise. And that's really all I have to say about that.
We have a question in the chat, if I can get to that. Ms. Winfrey is asking, oh, well, maybe this is a statement. It says, there are many AI tools. You choose the tool that is specific to the task you're trying to accomplish. So she gave us three options. ChatGPT is an AI tool, Claude is an AI tool, and Perplexity. So she gave us three options as tools that you can try to use for AI if you're interested.
Yeah, and OpenAI is going to be one of the next IPOs. OpenAI is already out there doing a lot of stuff, making money. So it's probably going to be a just as big or bigger IPO than SpaceX. So just know more stuff is coming. More AI things are coming. They're coming your way. And when it's us, we're going to look at those and evaluate whether we can afford to purchase those stocks now or wait till they start making profits. Because that's going to be important, is that are you making a profit? And I keep going back to that. And if they're making a profit, we're going to buy them. So let's summarize. Tonight, we covered wills and estate planning. We had attorney Liz Rogers on to talk about it. She covered some things that the other attorneys didn't cover, but keep in mind, we're more mature, so we ask different questions because we know more than we knew when we had the first attorney on over 2 years ago now. So the more we know, the more we're going to push to learn more. And I'm hoping to carry you all into where you know a lot more about what you're doing and how estate planning works. So Attorney Rogers' statements were not to take away from any of the other attorneys previously. We love all the attorneys that we use, and that's the reason why we wanted to just give her a chance to introduce another attorney who's doing a great job in our community. I got a call from Georgia yesterday, and one of our clients in Georgia was like, hey, Mr. Dale, you're doing a great job with the attorneys in Michigan, but I live in Georgia. Can you find a Georgia attorney? And I found 2 Georgia attorneys that will do the state plans and base them on Georgia law and make sure that we are appropriate. So just know that we will do whatever we need to make sure our clients have what they need. So having said that, I just thank you all for what you've done to help ELE to grow and stay a part of our community. In August, we're considering, and we're going to put it out there in as a link, we're considering doing a health and wealth seminar. And it may be a webinar, but it's health and wealth. And our guest would be Queen of Force. She's the author of Heal Thyself and a number of other books. She's appeared on The Breakfast Club and a number of other TV shows talking about things that affect our health. So I'm looking at partnering with Queen of Force to do health and wealth seminar. So that would be mid to late August. and we'll have more information out there on our site about that. And with that being said, any closing remarks, Miss Sanders, you want to close out with before I say good night?
Do want to say that I really enjoyed the webinar on tonight. I was hoping that you would touch on SpaceX for our clients because that was such a hot topic over the last few weeks. And Attorney Rogers did do an amazing job. It doesn't take from the other attorneys that we've had, but she did do a phenomenal job. Um, and your talk about should we take some of these profits was also a great conversation because a lot of times, the clients may not look at their accounts to know what's really going on. And us looking out and capturing some of those gains for them, I know when they get those statements, they are going to be smiling. So
Yeah.
great talk tonight.
Thank you, thank you, thank you. All right, so everyone, hey, thanks for tonight. Thanks for joining us. Tell a friend. We would like to have more people. We had 1 in 8 people sign up, and I didn't look at the peak, but I know 33 people are on still today, right now. And I look forward to the next time. And again, August, health and wealth. July will be announced on our website soon. Thank you all. Have a great evening.